investments in a number of our economic development activities here at the Brampton Board of Trade. Welcome, Renzo.
Well, thank you, Todd. Pleasure to be here.
Yeah, so the expert series is something that we've been doing for about 6 months now. Actually, we are 6 months into this global pandemic, and businesses are working together, working with their banks. I know TD has been very strong in helping both small business customers, manufacturers as well, and sharing advice, tips, forecasts as well. I have really been looking forward to today's session with Renzo as VP Commercial Banking. He is responsible for helping businesses to get the money they need to help preserve cash and to make sure that by working together with suppliers and customers, we get through the other side on this. Renzo has been a banker for some 30 plus years. He's worked across a number of industry sectors, specialties in real estate, automotive, equipment, and transportation. Most of his career has been working the front line, customer relationship, and he has also had leadership roles in credit management, operations, and product. So like many of our expert series, be it scenario planning, tips on government programs, etc., we're going to drill down with Renzo today about the banking relationship. Today's topic is getting to yes, optimizing your commercial banking relationship. And Renzo, why don't you start off? We're going to record this session as part of our expert series. People can find it at bramptonbot.com/expert series. But why don't you begin and tell us a little bit about your clients and how things have been going this first 6 months into the pandemic?
Sure. Okay. Thanks, Todd. Well, it's hard to believe it's been 6 months, but we continue to be on a work from home deal. And, we're trying to figure out ways to get some of our people back into the office. And so there's work going on with our premises and our security and our safety people to do that. But, the bank was able to, in a very short period of time, redeploy its workforce, and I speak specifically as it relates to commercial and some of the office workers, to work from home. And it was an amazing sort of thing in the first few weeks. There was interruptions and technology issues, and not to say that those are all solved, but quickly we were able to get, I think it was something like 45,000 people working online, and efficiency has been improving through the use of various technology tools. And, we're trying to connect. It's a different way of connecting versus, being in an office, standing in someone's door and being able to, talk about a deal, let's say, where in our case, now it's more deliberate, has to be more managed. And, people just need to be different type of communicators. It requires a different type of communication. Yeah. So we're definitely seeing that efficiency going up.
Good. And tell us a little bit more about your clients. What type of clients do you specifically deal with, Renzo?
So our clients are typically local to the Brampton area. They range from retail, wholesale, business consumer services, and manufacturing. And we do have a focus specifically for the Brampton area on transportation. Yes. From a revenue perspective, our clients typically they range from just under $1 million in revenues up to possibly over 250 million. So we deal with some larger companies as well, but we deal also with the mom and pop street level clients as well. And we have within our unit, our shop, 12 diverse teams of account managers and relationship managers to look after our clients, and we're looking after both their borrowing needs and their treasury or cash management needs as well. And also within in-house in our same office there here in Ontario and Lawson County Court, we have partners in retail, private banking, and wealth management. And all told, we can service the full needs of our business clients.
That's good. Well, that's pretty amazing that you have such a diversity in clientele by size, by
Right.
sector, and you've got an army there of 12 folks that have, I'm sure, had their consumer relationships disrupted. But I'm glad to hear that you're working from home, maintaining those connections. What are you hearing from your clients? Now, you would have been responsible and your team responsible for administering a lot of the government loan program, the CABE. How have things been on that portfolio itself, and how are your customers doing?
Yes. So I would say that, one of the key focuses we put in place when the pandemic hit, not that we don't stay in touch with our customers, but we just upped the game in terms of contacting customers. We wanted to make sure that they knew that we were here, that we did have options available. A lot of people were scared as to what the future would bring. And so, we stepped up the calling efforts and talked about the 12 teams. Those 12 teams all have teams of their own. So, all told, we're almost 40 people, and together we've done at least a few rounds of proactive calling to customers, just again to say, how are things going? How can we help? So when we started out, we started out specifically on our own. What we could do would be payment deferrals, and
Yes.
so we had quite a take up as it related to that. And the bank was, forward looking enough to be able to provide us the authority to input or to, let's say, commence those payment deferrals up to 6 months on our own authority. And they also allowed us to do bulges on our authority as well, because that was helpful for some clientele who were in a bit of a tough spot and needed to bridge over, because we had a wide range of customers and the impact as it related to COVID. Some of them saw their business go up. A lot of them did see their business go up. Some of them range from mild to severe impact, and some, like in the business service area, completely shut down. And so, you couldn't have a one size fits all type of approach, but we started with the payment deferrals and with the bulges, which was, we had a number of clients take us up on that. As it relates to CEBA specifically,
Yep.
the bank had a huge take up as it related to CEBA. I mean, I don't have the number to quote exactly, but it was in the hundreds of thousands, and I'm talking across Canada, businesses that would have opted for the CEBA loan. It was the speed at which it was distributed and the ability to qualify was actually, I believe, unprecedented. So there was quite a lot. But apart from that, we also saw a number of our customers take advantage of KECRA, which would be the rental relief program, of CERB, of course, for their employees that had to be laid off, of wage subsidies for those employees that they wanted to keep on, but where the business was earning a fraction of the revenue. And also, we also partnered up with EDC and BDC as it relates to doing what they call BCAP type of loans. This is a scenario where the bank would distribute on behalf of EDC and BDC, but there would be a risk sharing.
Right. So a couple of good things you mentioned there that certainly we've seen in businesses on a weekly basis when they connect with the Brampton Board of Trade. And your first point was the impact has been very uneven. There are some companies that have not had revenue. Those in the amusement industry, Wet and Wild here in Brampton, for example, is still not able to operate. Many restaurants saw, 3 months of no or very little revenue, whereas we've seen home renovations, real estate, residential real estate, and a lot of the logistics companies and e-commerce going very, very well. So it must be really challenging to be a banker at this time through this pandemic, because of the diversity of clients and the diversity of exposure that they've had to the negative impacts of the pandemic. Talk to me about loans, and in particular, any tips that you might have, how can a business best prepare for a loan? And has your analysis, Renzo, has it changed at all, or maybe you can go a little deeper? That's the
Yeah.
kind of the focus of our topic here today is how can companies best prepare for an approval of a loan? What tips do you have for them, and how do you analyze requests these days?
Okay. So, I mean, I would say that, being best prepared means demonstrating to the bank that you understand as a business person how your company makes money, how it earns revenue, and how it generates profits. And that you also understand what it takes to sustain that revenue generation and that profitability. And so for us, typically we would look at the historical results of a company and say, okay, based on the historical results, then the bank has a fair degree of comfort that would say, we can make this loan to the company, and it would be able to, continue on with those historical results and repay the loan. So the difference that's come into play now is generally is that the business case and the projections come much more into play. And so what I would say is, not only because of the COVID impact, but we also live in an era of ongoing disruption. I mean, all of our businesses have been faced or in some way have to deal with disruptive change. And so that's all the more reason why it's important to look forward, which actually, makes it a lot more interesting in terms of trying to look at a business and say, am I comfortable in lending to this organization? I mean, but the challenge is for businesses, as we ask them, we need you to look forward and provide the projection. Well, because of the uncertainty as it relates to specifically COVID, that they have some difficulties. And so in that regard, what I would say is, it does get a little tricky, but it's important for them to understand that the bank's not looking as an investor for growing and high returns. What they want is they want to be able to say the projection aligns well with the historical, and that historical may have a bit of a bump in it because of the COVID. But if we looked at the historical pre that bump, then does the growth projection align with the history? Are the margins similar? If you're going to go in with a margin of 20% when historically the company's been generating 10, well, then how do we justify that? And if the company is going to be growing 30%, well, what do we have in place to finance that growth? So those are the kind of things I would say specifically as it relates to forward-looking. The saying of under-promising and over-delivering really comes into play, because if you want the bank to continue to say yes, then I would say what you do is you under-promise and over-deliver. And I think that definitely
rule number one: don't surprise your banker.
Right. No one likes surprise.
Good tips there, Renzo. And I heard you say two things: the business case and the forecast. And now in these times, the forecast may be a little more challenging. You're looking at forecast and business case a little bit more detail these days. Good point that you made there in terms of the forecast must have some realism with respect to historic as well. And if there is a difference in terms of the percentage forecast, you're looking to make investment in people, in businesses that can explain that. There's usually a handful of criteria that a banker looks at. You've mentioned two, and very, very importantly. Sometimes, I guess I'll ask the question: are you, from TD's perspective, are you looking for certain types of businesses, and are certain types of businesses more likely to get a loan than another. I don't know if you have any comment about any trends that are happening in businesses, bricks and mortar versus online, those that are have new innovations as opposed to traditional. Any sector, any trends happening there with respect to the type of business or the type of industry?
Right, right. I would say that, as I mentioned, we deal with the widest range of businesses. So they all have different needs. Everybody has business banking needs. So again, I don't want to focus it totally on lending because there's also a whole slew of electronic banking and treasury management needs that we actually provide for customers. And that makes up a large part of the entire relationship. But as it relates to lending, we have seen some customers opt for some innovation spending. The term onshoring is something that we've heard a few times, more than a few times, with companies. And specifically, if I had to pinpoint it, I would say that metal fabrication. We've seen quite a lot as it relates to the metal fabrication, specifically for construction and for automotive, perhaps. So we have seen quite a lot in that area. But typically, as it relates, and some companies opt to import technology, and so they brought some technology over from other parts of the world, installed it here, and have done quite well. What I would say is, what's important in that respect is that you're able to marry that technology with the expertise. So you want to be able to say, I have the technology and I have the people that are able to run and understand that technology. And again, so that comes down to management. And so it's not just enough to bring in the best mousetrap. You got to have somebody that knows how to use it, when to use it, and to use it efficiently. And so I would say that's important. The other thing we've seen is, as it relates to the growth of the distribution side of the economy, the Amazoning of the world, this has been a boom for our transportation business, of course. It's allowed some of our transportation businesses to integrate into co-packaging, storage, into intermodal, into short haulage. They've definitely taken advantage of that distribution economy. And what that's done as well is it's increased the demand for industrial land and space. And so, you're seeing real estate prices buoyant as a result of that, especially in the Brampton area.
Yeah, well, very, very good. Thanks for that overview. And both the impact has been uneven and impacted different businesses and sectors differently. And it makes sense that, you take a look at the viability of a business case accordingly. And what I heard you say is, with respect to innovation, and those companies that are on the path to a digital transformation are, able to do online sales, are able to manage the customer relationship digitally, certainly are ones that seem to be making the transition a little bit more. Your comment with respect to management also was the human tech interface, ensuring that there are individuals in management that can optimize the use of the technology. We just did a business confidence survey, on business confidence and economic affairs, and businesses felt comfortable that they knew where to find talent, but on the other hand, were still having difficulty filling some key positions. So, you're really helping us here, Renzo, those that are watching and tuning in. The strength of the business case, the realistic nature of projections, having the management to implement the technology, the industry and the business that you're in. You mentioned metal bending. A lot of folks are adopting new new industry 4.0 technologies. It was interesting, and I guess from your perspective as well, this survey that we did, over 100 Brampton Board of Trade members, they indicated that above all, budgeting or their budget for new technology, new innovation was the largest limiting factor. So this is really helpful in you helping us to determine the best way to approach a banker, the best way to be prepared for a positive decision on financing. I want to go back to the criteria, but I don't want to forget the point that you mentioned BCAP. Maybe you could, that is perhaps the newest of government programs. So you mentioned it's coordinated with EDC. Tell us about that program, because many may not know about that one yet.
Oh, okay, I can do that. I mean, in a nutshell, the BCAP program, it's a partnering between the banks and BDC, EDC. The banks actually would deliver based on, you know, our criteria of evaluation on the loan request. However, the funds are now, the risk as it relates to the funds are shared between the bank and the BDC and the EDC. And so there's different arrangements. Typically, you know, the arrangement is the bank would participate in 20% of the risk, and the EDC and the BDC would participate in 80% of the risk. So substantially, a lot of the risk is being taken off of the shoulder of the bank. I mean, the security as it relates to that particular loan would likewise be shared in those proportions. However, what it does is it you know, opens up a channel of funding for the businesses that, because you know, the EDC and the BDC are taking on a substantial amount of risk.
Right, that makes sense. So it allows banks like yours to perhaps make decisions on business cases that might be borderline. If you've got other partners that are sharing the risk, it allows you to be more favorable towards some of those business cases.
That's correct.
Good. So you mentioned that in your portfolio, loans are one of the one of the products, but there are many others as well. You know, I want to go back again. The topic of this session is getting to yes. We've talked about the business case, the projections. We've talked about the management, the integration with technology. There's an old joke in Canadian finance. I'm an old banker from way back, but my clients are always frustrated when they say, you know what, if you want to get money, you have to have money. So talk to us a little bit about equity and the role that equity plays in equity and security. You know, securing it with a hard asset. What role does that play now? I know that a lot of loans are done via credit score as well. So there's three criteria there. Maybe you can comment on to get us a loan. What are the normal equity requirements? How has that changed? And if you don't have security, what other products might be out there? And then again, the role of credit scores is something mentioned from one of our viewers. Can you comment on those three?
Okay, sure. So let me start with you know, equity. So equity is in a lot of ways the safety the bank looks at as it relates to the safety of their funds. So the equity is the cushion that the bank's funds sit ahead of, essentially, that the business requires to support its ongoing needs. I would say, if I had to kind of put it into a perspective of how a bank would look at the entire picture of a loan request, and as you mentioned, the risk scoring, the bank has extensive scoring models that it utilizes, and those scoring models typically would, you know, rate based on industry, business, and financial risk. So those are the three main areas that the scoring models touch on. And then, but then if I in my 31 years, thought of it always more like tried to think of it more simply before we had these scoring models, I would go to the 3 C's of credit. And some people might say they're 4, some people might say they're 5. I actually, in my mind, at the end of the day, they fall to within 3. And
Okay.
the first one, as you mentioned, security, that falls within the collateral side, but the first one is as it relates to character. So, we go to the character subheading, and we basically say this is going to encapsulate all your, honesty, management, understanding of your business, all the areas, ethics, all the character issues or areas that basically would say to the bank, you know what, dealing with these people or this company is actually going to be a good bet, right? And I can tell you, in every time I go see a customer, that is the biggest factor that gets me to the next level. I see the passion, I see the drive, I see they know the nuts and bolts of their business. And so that whole area of encapsulates that character piece, and then and makes you comfortable. And what I would say is, what that brings me to is the topic of brokers and consultants, because someone might say, well, if character is so important, then how does a broker or consultant substitute in for character? And I'd say, I'm actually for consultants and brokers, putting together and perhaps presenting, because I understand these things do get complex. And I understand also that the business owner is preoccupied in the most important thing, which is running their business. So the broker and the consultant plays an integral role. However, what I would say is, not to the point where the ownership or the owner representative, be it the CFO or the controller, is not a part of the discussions. So it doesn't have the opportunity to illustrate the character, because that is so important. So that's the first C. The next C would be what I call capacity. In the sense of business financing, I use the word capacity to mean the ability of the company to service its debt obligations, after expenses, to be able to service the debt obligation. And so, it's generating enough profitability, and with a small buffer is all the bank looks for, to be able to manage those payments. And then the third one you mentioned about equity, as a C, I call it collateral. And that's kind of the security that the bank wants as support for the loan. Now, some of that security can range from, your typical real estate security on a loan to values that are acceptable to a bank scenario, which typically is at 75%, or it could be accounts receivable, because accounts receivable are very acceptable forms of collateral, and we'll actually, in a lot of cases, we will, in standard cases, the bank would go to 80%, and in a lot of cases, they go as high as 95 with proper insurance, or with a good counterparty. The other pieces of the collateral might be the equipment that's being financed, and then an area that's sometimes overlooked in terms of collateral could be the cash flow of the business itself. A business that's generating, sustained cash flow, so it has a history of year in, year out, growth. Well, it doesn't have to be growth, but sustained profitability and cash flow generation. In those cases, the cash flow of the business itself could be the collateral that the bank could satisfy itself with to make the loan. And we do lending like that daily, as it relates to businesses doing dividends, buyouts, or as it relates to seeding other ventures.
Yes.
Well.
Wow, this has been really helpful, Renzo. So the 3 C's, I think, a real good takeaway: character, capacity, and collateral. Character, the management itself, its honesty, the ethics of the company. capacity, meaning the ability to service debt. You talked earlier about forecasts and the business case. When we're talking about forecast, I meant to ask this earlier. What are you typically looking at for projections? 1 year, 2 year, 3 year? What's reasonable?
You know, a lot of it does depend on the term of the loan. So it's, you know, if you're looking for a 5-year loan, 7-year loan, you know, sometimes a 3-year projection. But, you know, typically once you get beyond the 2-year point, everybody's throwing darts against a wall in any case. So, so, you know, what we look for is something that we could test we can run our tests against for, you know, at least about 8 quarters or so a couple of years.
Yes, right. 8 quarters or a couple of years for sure. And the third C there, of course, collateral for those companies that have equity to support or security to reduce risk. Loan to value on security at 75% is a general rule of thumb. Accounts receivable can be 80 to 95%. And of course, you mentioned cash flow. Renzo, what a tremendous little acronym, the 3 C's, or analogy, I guess you measure the 3 C's and explaining character, capacity, and collateral. Thank you so much for that. We're about to wrap up our session, Renzo, and I just wanted to get your thoughts about the future. Because of the overwhelming disruption that some companies have seen, we may see more insolvencies this year than in past years. And I'm just wondering if there's any conversations happening within banks with respect to that unfortunate circumstance. If we do see insolvencies in 2020, going forward, bouncing back, that same business person coming back to you in 21 or 22, for example, will insolvencies in 2020 be viewed differently than, you know, because in a large, it can be argued that it's not a reflection of management, and every case is different, of course, but this has been an extraordinary half year. Looks like it's going to be another 6 months extraordinary pandemic. Any thoughts on, you know, in the worst case scenario, will 2020 insolvencies be looked at differently than, say, 2019, 18, or prior?
It's interesting. I never really thought of it like, so it'd be like an insolvency with an asterisk.
With an asterisk, yeah.
The asterisk on the insolvency. You know, it really is hard to tell. I mean, you know, as we've seen a lot as it relates to this COVID pandemic is, you know, there's a lot of things are actually being attributed to COVID, which actually may have not really been, like, COVID might have actually just kind of like put it over the edge. But, you know, there was, as you know, as I mentioned earlier, we live in a disruptive age. And so, you know, some might just say this is just another disruptor that, you know, business needs to adjust to. And that's a very cold way of looking at it. But I would definitely say, you know, like you said, no one likes surprises. And so if there's a blemish in everybody, we all have them in our past, something happens and it's out of our control. The best thing to do is to face it head on and early. And, you know, to be able to rationalize something ahead of time versus, you know, it being left for your banker to make up their own conclusions, you know, you're better off to, I'd say to hold court while you're present would be my recommendation. And you know, I've oftentimes seen situations where businesses have blips and they're able to rationalize it. Bank gets behind it. You know, again, collateral, capacity, and character, and you know, you move on. But sometimes it seems easier to beg forgiveness than ask permission, but oftentimes, you know, it takes away from your lets. And then that's not a no pun intended, Todd, but it does take away right? If you know what I mean.
I
So
do know what you mean. Yeah,
in a big partnership
yeah,
means
this is very, very helpful. You made a very, very good point. Even prior to the pandemic, businesses were facing tremendous waves of change that could include demography, an aging of the workforce, a big retirement. As well of business owners and the transfer of company knowledge. A second wave being technological. A whole new suite of technologies, be it Internet of Things, cybersecurity, to name a few, automated vehicles, all sorts of cloud computing as well. Two big waves of change there. And then we've seen a regulatory change for those that sell outside of Canada's borders. We're seeing a lot of protectionism, a lot of populism with our biggest customer to the south, the US, and other parts of the world as well. Those regulatory changes, the demographic changes, the technological changes were disrupting a lot of businesses prior to the pandemic. So you're right. Going back, I think the best advice that you've given to folks tuning in today is think back to those 3 C's: character, capacity, collateral. Put your best case forward to your banker. If there are blemishes in the past, bring them up. Advise how you're addressing it. Make sure your projections, your forecasts are reasonable, that you have a good couple of years anyway, or longer if what you're seeking, the term of what you're seeking is longer. I have to tell you, Renzo, this has been really, really helpful. We've really drilled down here, and I want to thank you very, very much for your advice here today. Any parting words, any thoughts, any forecasts overall, Renzo, with respect to how you and TD see the economy shaping up in 2021?
I mean, all I would say is from the bank's economic perspective, I took a look at, and no surprise, interest rates, good news, interest rates should remain low for some time. The Bank of Canada met, I believe, last week and reaffirmed some of that. And now is a great time to go long on some rates because the fixed rates are historical lows. So now if you have some debt that's sitting in short term that you want to put into long, now is a good time to do it. I would say also what's happening, or because rates have been so low, it's also been impacting the prices of things. And so, think about the stock market, think about, again, real estate. And so, you just have to be cautious about where we are in terms of prices because of rates being so low. And in terms of Canada, I heard just read recently is that we're 90% back to pre-pandemic times as it relates to GDP. So that's a good news story for sure. But the headwinds are basically around immigration because we need immigration to grow, and that's going to impact population. And the other headwind seems to be in the way of businesses investing in capital, technology, as you're mentioning. Also, specifically, oil production, oil related investing, obviously way down. And so those are kind of the areas of concern. But as it relates to the business banker relationship, you think of it as a partnership. The bank wants to be able to see the business grow. That's the most gratifying thing. The bank wants to make the loan, and definitely, I can tell you from the people that work with me in our Brampton office, we are pro-business, and we're looking for ways to get some good money out there and to see that money put to good use. So
Fantastic, Renzo, and I certainly can attest to the authentic care that you and your colleagues and every one that I've met, having been introduced through you at TD, the care that they have for the customer. And today, I think you demonstrated it again by giving us some very practical tips on how to be prepared for a conversation with the banker, what the banker looks for, and really, I think it's given us some inspiration for our next visit to our banker. So thank you so much for that, Renzo. Ladies and gentlemen, I'm going to wrap up now, and I just want you to get your calendars out and mark down a couple of dates that you might find helpful. Every Wednesday, we get together 8 a.m. We call it Wake Up Wednesday. It's an opportunity to drop in. It's just an hour, always ends on time, and it's an opportunity for you to meet some people, maybe share some challenges, some opportunities, and what we try to do in that Wake Up Wednesday session is connect you with the people, the programs, the services that we have here at the Brampton Board of Trade that can help you out, or elsewhere in the community. We go into a little more deeper dive, similar to what we've done here every Friday at 10 o'clock with a check-in with the CEO. That's me. We take a look at some of the options, some of the opportunities that you may be pursuing, and how we can match Board of Trade services to help you capture them, engage your business advantage, engage your business strategy, or even just to get to know your community better so that you can better serve your customers. We have a number of networks. Renzo mentioned that one of the specialties of the bank is in transportation lending. We have a goods movement network that meets on a quarterly basis. This Friday, September 18th at 8 o'clock, we will be reviewing a lot that's happened over the summer with respect to the development of a new intermodal hub in Milton, which we hope to get a positive decision from the federal government on a little later this month. We'll talk as well about the GTA West Corridor Highway and its plans here in Brampton. Talent. We talked about the importance of human tech interface, and the Talent Network meets on September 22nd. They're going to be talking about a number of things related to recruitment, retention, and development of talent here in Brampton, and a special focus this month on unconscious bias. Of course, we've had a bit of a social upheaval as well. This pandemic has negatively impacted Black business owners, women as well. So we'll be talking about a couple of issues with respect to diversity and inclusion on the 22nd as well. Our trade network is very active. Renzo mentioned EDC. They have sponsored the trade network, and we'll be talking about what the forecast is in terms of exports. Maybe they'll tell us a little bit more about the BCAP program as well. That's September 24th at 8 a.m. Our Brampton Innovation Network, a group of manufacturers focused on technology, Industry 4.0 technologies, helping one another, September 29th, 8 a.m. These are all open to members of the Brampton Board of Trade. We hope that you take membership in the board. Connect Work to Wednesday morning is a special guest. Connect Work is where Brampton business women meet, September 16th, 9 a.m. Claudia DeSante, Senior Policy Analyst with the Ontario Chamber of Commerce, will provide us an overview of She-Covery. She-Covery is the name of the report that she's put together, that the OOCC, the Ontario Chamber of Commerce, put together, talking about the differences in recovery for women-led businesses, and that should be a very, very interesting session. Vision Transportation is part of our next expert series on 1 o'clock, Thursday, September 17th, talking about disrupt to differentiate, learn how Vision Transportation anticipates customer needs. Renzo mentioned a number of innovations that are happening in that industry, be it less than loads, alliances with couriers, etc. Should be a really good session on Thursday afternoon. And next week, our Business Insight series with BSC Solutions, we're going to drill down again on cyber security. September 28th, TelcoWare, a online marketing company, is going to be talking about the top 5 online engagement trends. So if you're looking for specific tips like we heard today from Renzo, if you're looking for specific tips on how to engage your members online, Mustafa from Telcoware has a really interesting presentation for us on September 28th. Ladies and gentlemen, one of the best things we do at the Brampton Board of Trade is recognize the efforts that you make, the excellence that you provide in your products, your services. Please buy your tickets to the Business Excellence Awards. It's a virtual session this year, brought to us by TD, an excellent sponsor of all of our economic development programs. TD is the presenting sponsor for our 2020 Business Excellence Awards. It's going to be virtual this year, 6 p.m. on October 20th. We're going to have a lot of fun. You'll see Renzo there. You'll see all your friends. The leading companies are together. We're going to give out Business Person of the Year. William Johnson from Bramgate Automotive is being honored this year, plus 13 other of your colleagues, friends in awards from everything from leadership to communications to community impact, logistics, manufacturing, retail. It's just going to be a super fun night. I hope you can make it. Go to bramptonbot.com/BEA2020 to get your tickets and register. If you're interested in seeing this session again, please go to bramptonbot.com/expert series. And Renzo, again, I can't say enough. Thank you so much for your preparation for today, for the engaging discussion. I think you've helped out a lot of businesses, and we look forward to seeing you again sometime real soon. Thanks so much.
Thanks, Todd. It was a pleasure.
Bye now.
Bye.